So what do you make of these moves to the downside as we go into this Fed meeting? Generally, mortgage rates, they seem to be tied to the 10-year. The Fed has a bigger influence on the 2-year. Do you see this move as sustainable, this downside move in rates?
I think it's not dramatic, as we know, and I think what we're seeing has already been baked in. I don't think we're going to see rates go much lower than this. And I think, the sentiment so far in the housing market has been decent. We've seen a pretty good pickup. And, buyers have a bigger advantage now because rates have come down and we've seen more inventory come on the market. And so that's good. We still need sellers to bring their prices down a little bit, but we need more housing, and we do have an affordability issue in the United States. And so we need to build more housing. I think that's the biggest challenge for us right now.
Bess, you're hitting on, I think, is an issue for anybody that's ever bought a house or sold a house. The idea here that a lot of people want the owners to lower their prices. But if we're going into a rate cutting cycle that would potentially lower rates, then generally prices go up. So if we're going to a rate cutting cycle, if you're an owner, why would you lower your price at this point?
Because prices have been too high for too long. And just because sellers think the prices should remain high is not a reason to keep them high. And things haven't been moving. So that is an indication that sellers need to reduce prices. And now that buyers have more affordability with rates coming down, you want to meet in the middle. When you have a healthy intersection of supply and demand, then the market moves. And we've had this sort of, stalemate where buyers and sellers have been separated and there hasn't been a healthy movement. And so we need to get everybody into the market. And so sellers have to participate in that to keep the market moving.
Okay. With that thought in mind, the idea of a rate cut, it may create, just more income for people, the idea that they potentially could be paying less for goods and things like that. Would that also help the housing market, this one rate cut, or do we need to see a series of rate cuts before consumers just have more money to spend on housing?
Probably we're going to need to see more rate cuts if Chairman Powell decides to do that, because I don't think we're going to see much more than this. This lower 30-year has been baked in, and so I don't think we're going to see it come down much more. But we may get 2 more cuts this year, is my understanding, and potentially 3 more next year, and that may potentially influence mortgage rates to come down, maybe into the high fives, which I think then you would see much more movement in the market overall.
All right, we have some housing reports coming up later today. What are your expectations? Are we going to see any movement when it comes to home builders and things like that? Starts with the idea that we're going into a rate cutting cycle. Does that motivate the actual builders themselves to start building in anticipation of there being more liquidity in the market?
I don't think so.
Really?
I mean, I think people are waiting. I think this is an environment where people are taking their time. They're not sure. The narrative is unclear. I think it's really important that the Fed maintains its independence, and there's no sort of politicization of what the Fed is doing. And so I think people are waiting to see what's going to happen. There's a lot of talk about a potential recession because we're seeing the slower labor market. Inflation is still higher. And I think that's what the Fed is trying to control to keep economic stability for the future, which is what we care about.
All right. I think you hit on my last question for you. Some of the president's efforts to have an influence on the Fed, whether just openly saying they should cut, now putting his own nominee on the Federal Reserve. Do you think that could impact rates long term and also just other things that impact the housing markets like inflation, long-term bond rates? Does that have a potential impact on the housing market?
I think down the line it could. I mean, I think we have to be careful. President Nixon, had tried to pressure the Fed back in the 70s to cut rates because he wanted to have a stronger market. But in the long term, there was incredible volatility and instability, and we don't want to repeat something like that for a short-term goal to create all this chaos in the market. And I think it was Ken Griffin last week who wrote a great op-ed in the Wall Street Journal about how crucial it is to keep Fed independence. And we want to maintain that, right? Super important for the market in the future and stability, which is what we care about greatly.